Hello everyone, welcome back. So in this section of the course, we are going to come up with assumptions. So these assumptions will drive the forecasting or will help us to project the income statement. So without wasting time, let's dive right into it. So here, first of all, on assumptions, we need to compute the revenue year-on-year growth rate, and this is the revenue driver that is going to drive our revenue projections. And then after that we will compute the cost of goods sold as a percentage of revenue, and then selling and general expenses and admin expenses as a percentage of revenue, and then we compute the income tax expense. So to compute the year-on-year revenue expenses, all we need to do is we have to take the current or the 2021 revenue figure, we divide it by the 2020 revenue figure, we subtract 1, and that will give us the year-on-year growth rate. So we are saying from 2020 to 2021 revenue grew by 8.5%, and then we can copy the formula to the right. So I hope by now you know how to copy the formula to the right. So let's just press Ctrl R. Perfect. And then let's compute cost of goods sold as a percentage of revenue. And then here what we are going to do is we put a negative sign such that if that multiplies the negative figure for cost of sales, it will give us a positive figure for cost of sales, such that when we divide it by revenue, we get a positive percentage. So let's just see. Right, so we can copy the formula to the right, and then SG&A, we do the same. SG&A, then we divide that by revenue. We copy the formula to the right, and we do that for income tax. So income tax, we divide it by pre-tax profit, which is EBIT, earnings before tax, and that will give us this one. Right, so now that we have got our assumptions, we need now to forecast revenue from 2023 to 2021. So here, my assumption for revenue for now, we are going to assume that revenue is going to grow by 8% from 2023 to 2027. So I'll just put my 8% there. And so I've hard coded this, which means it has to be turned into blue. So for now, let me just copy that to the right. So let me just apply the blue color here. So to turn this figure into blue or percentage into blue, Alt HFC, and then I'll choose this one. And here on COGS, I will just choose 30%. So I'm assuming that COGS are going to grow by, as a percentage of revenue, 30% throughout, and here 30.4% throughout, and here I'll take 30% throughout. Right, this is just an assumption, right? So here since I've hard coded these ones, I've entered them manually, I have to turn them into percentages. So I'll just highlight all that, Alt ES, and then press T here, and that's it. So I'll press escape to disable to disable that. So here I have to project the income statement. So here we are going to project revenue. So we are going to project all the other line items except for depreciation, interest income, interest and interest expense. So let's just do that. So here what we are going to do is we are going to take this figure, the revenue figure for 2022, we multiply that by 1 plus, we take this percentage for revenue, and then we copy that to the right like this, and we also come here. So here we had projected that COGS is going to grow by 30% of the revenue. So here we say that times this one, and then we copy that to the right like this. So here, since this one gross profit is a totaling item, So we just copy that to the right. So it will just apply the formula there. And we have selling in general, so we do the same. So we pick selling in general, and then we multiply that by revenue, and that will copy to the right. And here we copy that to the right as well. So here we can come here and we can disable, we can ignore that. So depreciation, we leave it blank for now. So let's just copy that, and here we leave this blank for now, and then we just copy that, and EBIT, we just copy that to the right for now. And here all we need to do is we pick the 30% that we've projected, multiplied by this one, and then that will copy to the right. So here we can copy this formula to the right, just like that. So here we have successfully projected the income statement, and except for depreciation, interest income, and interest expense. So depreciation expense will come once we compute depreciation for property, plant, and equipment. That will come from the depreciation schedule, and interest income, interest expense, that will come from the debt schedule. So this is it, guys. See you in the next section, where we are going to focus on the cash flow statement. So see you in the next section.